Welcome back. You're still tuned into Halftime Report on CNBC TV18. Let's talk about one particular company, Aarti Drugs, which in fact has reported what was a good set of numbers. The company witnessed a recovery in terms of margins. The company says Q2 was aided by favorable export mix as well as execution. We have with us Adhish Patil, who's the CFO of Aarti Drugs, joining in. Adhish, thank you very much for taking the time out. Well, it's a 9% growth this quarter. Just tell us how the API business did in particular. What was the volume and price offtake, considering that you have indicated that the past 2 quarters odd, you have seen a recovery in demand?
Yeah, so the API volumes actually grew by 9.33% for this quarter, year on year. And majorly entire volumes were driven by because of the exports. In fact, in domestic market, we suffered a couple of percent volume degrowth, especially because of the antibiotic segment. But the export market did fantastically well, as well as the formulations also increased quite a lot. And that is why we got overall 9% value growth for this particular quarter.
So you've said that your exports did very well this quarter. You've said that your momentum also is expected to continue. So put some numbers to that. How much did, say, the domestic market grow this quarter? How much did exports grow this quarter? Yeah. And what are you guiding for both segments?
Yeah. So in fact, we saw around 30% volume growth for exports this particular quarter. And overall for the standalone company, around 42% of the sales came from export market, which is pretty steep. Earlier, we used to have it around 36-37%. And even for formulations, the export market was around 68% of the total sales. And that is the main reason why we saw better margins in this particular quarter.
Okay, so that was the main reason for better margins in this quarter. But then do we start expecting better margins going forward as well? How is the export trend now in Q3? Do you see that continuing?
So the export will continue a little bit, but mainly we are banking more on the fact that 2 greenfield projects, we will see more and more volumes in those greenfield projects. One of the greenfield project which we just started in September month is doing very well. All the quality parameters are matching, impurity profiles are excellent. Whereas the first greenfield project which we commenced last year actually in salicylic acid, we still are carrying few losses which are being expensed out in the current P&L. So whatever numbers you are seeing is after taking into account those losses. So once we reduce those losses, the P&L will look drastically different.
And then margins by the end of the year would be better as well, right? So
yeah,
we could start seeing better margins in Q3, Q4?
Yes. So typically Q3 for our business is lean, mainly because we have certain therapies like antibiotics and antidiarrheal, which are acute therapies. And December quarter, typically offtake is a bit less. But March quarter should be really good, what we expect.
Okay. Just a couple of questions. Formulations. What was the growth this quarter for your formulations business, especially from the regulated markets?
So overall formulation growth was around 26%. It would be difficult to pinpoint the regulated market growth, but majorly the entire growth has come from the export market. And that is why the percentage of exports to the overall formulation sales for this quarter is around 68%, which typically is around 55%.
Okay. All right. Just one quick follow-up. You seem to be actually focusing on oncology as a segment now. Just give us a sense in terms of how much revenue are you getting from the oncology segment as a therapy, and how much of a push are you looking at when it comes to oncology?
Okay. So this oncology segment is definitely a very long-term game for us. Last year, we just got a formulation plant approved by US FDA for the oncology segment, which was a very important thing, first milestone for us. And then we are registering a lot of oncology molecules. We are doing a lot of R&D in oncology. In fact, you can say 30% of the total capex or investing cash flow this particular year went into formulations, and a majority of that went into the R&D development of oncology products. So we are developing a big basket. It will take around 3 to 4 years for it to meaningfully reflect in the revenues, but the total potential of these molecules from the plant what we have is around 500 to 600 crores per annum. And once we hit that, then definitely the margin profile should look starkly different from what it is right now for formulations.
What would it be?
So as of now, our formulation EBITDA margin is quite less. Uh, um, in fact, it is slightly lesser than the our API and Spec Chem business. Our API Spec Chem business was around 13+% EBITDA margin for this quarter, and formulation was 90 basis less approximately.
Right.
So what we expect, yeah, for oncology, for only oncology segment, the margins should be much higher. Let's say in 20s to late 20s. But overall, on aggregate basis, we still would like to achieve that 20% mark for formulation business.
And on API, what's your prognosis on the prices? Do you believe that we bottomed out, or do we see some further correction from current levels? Because that directly impacts the absolute revenue that you guide for, right?
Right. Definitely. So we were expecting that in terms of year-on-year perspective, that we will see some negative price variations in September quarter, and that happened. Means we saw around 3.5% negative, 3.5 to 4% negative price variation in September quarter. In spite of that, we had a value growth of 6%. The prices have definitely bottomed out. In fact, for few of the molecules, we have seen the prices are slightly going up based on the raw input prices.
Sure.
And certain molecules it is going down, but it is more or less stabilized.
All right. Just a quick last question, Adhish. Are you all participating in the GLP-1 opportunity because you have an anti-diabetes segment? Is GLP-1 a part of it?
Yeah. So as of now, means for next 5 to 10 years growth, we are engaging outside consultants as well to develop a product portfolio to take care of growth from, let's say, 5 to 10 years perspective. And in that, we will definitely evaluate these molecules. But as of now, we are not announcing anything that we are venturing into that particular segment.
Okay. All right, Adhish, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Aarti Drugs. The stock is up around 3.6% in today's trading session. Reacting to its numbers, we'll take a short break, but we'll get you a lot more on the markets once we're back. Stay tuned.